All right, Mark here. Hello, everyone, and thank you for joining me for another Greenbridge Investing market analysis. Today is Monday, so we're going to start out the week here. We're going to take a look at the major markets, Bitcoin, and a couple of stocks of interest. And also, since I've invited everyone here, feel free to ask questions as I go through the analysis. Again, I'm going to try to keep this at 15 minutes. So if I can't answer your question in full detail, I'll get to it in the chat room. Okay, so with that, let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Okay, so actually, since today is Monday, that's the Bitcoin chart, but you know what? We have to look at the economic calendar, right? Because we have to make sure that we want to be aware of what's going on during the week, especially if we're getting involved in something like, a Forex pair or oil or something like that, right? So what do we have today? We have the Royal Bank of Australia, okay, meeting minutes. This is not a big deal, all right. Great Britain unemployment rate. This might be significant because of the context of the current environment. But it's going to have to be a surprise, something that the market doesn't expect. So we're not in the British pound, so it's really not going to make a big difference to us. Okay, Canadian retail sales, no, that's not important. Everything else here, Germany, like PMI, composite, these are going to affect the euro. And, we don't have any trades in that. So, again, these aren't huge reports here, okay? Now, the U.S. jobless claims, that could be something that is on the 23rd, which is 8:30 a.m. Eastern time. I believe that is Wednesday, right? No, I'm sorry, Thursday is the 23rd. So that, because of the context of the situation, if there are any surprises there, it can set the tone for the market and create a range expansion. So we want to be aware of that, especially if we're involved in market sensitive stocks, something like, Microsoft, those type of stocks that are seriously affected. And yeah, that's pretty much it, right? This is not a big deal either. All right, so we don't have anything like NFP this week or anything like an FOMC meeting. So for the most part, that's the only report that I would really keep an eye on because, we don't have any Forex pairs at the moment, and that's that. All right, so again, if you have questions, feel free to ask while I go through this, and I'll try to answer them as quickly as I can. All right, so let's begin with Bitcoin. Now, here's the thing. So yesterday in the evening, this candle closed, right? See this little inside bar right here? That's yesterday's candle. That's an inside bar. We took out the low of that inside bar, which was basically 70 and a half, right? 7,050, whatever. And that's where we actually shared our swing trade long a few days before that. Now, this is a sell signal because we took out that inside bar low. But here's what I've been telling our members. Just because it's a sell signal doesn't mean it's going to follow through. Now, if it does, we're looking at maybe the 64, 65 support because that's the next relevant support. If it clears that support, we're looking at 6,000. This has not changed. It was the same a week ago. Now, here's where the bears go wrong with this. They assume that they see a sell signal, or even worse on a smaller time frame. They pile into this thing, expecting this thing to go to 5,000, and all we do is sit in a tight range. As you can see, this candle, today's candle, is indecisive. When selling activity is real, it doesn't form dojis, okay? You get large red candles and they usually unfold quickly. So we have a doji, it's the middle of the day. This thing has maybe 5 or 6 hours before it closes. This is really not a big deal. So as far as our swing trades go, there's nothing to do. We're not going to react to this. We're not going to exit our trades. Our stops are in place. We have to let the market determine the outcome of the trade. So again, yes, we have this resistance at the 7,300 level, but if this holds and forms another higher low, I would anticipate that the next leg up, which could occur sometime this week, maybe Thursday or Friday, to push through this resistance into the 7,000s. That's what I'm looking for based on this price action here. Okay, let's go on to the stock market. Now, I'm going to begin with the Nasdaq 100, and in there, let me go to the Nasdaq 100. Which is the NSX USD. I like to use the CFD because it's a nice clean chart. Now look at this. So today's candle started out red, okay, at the market open. And I put it in the chat room. I said, well, it depends on how this thing closes. Look at the candle now. That is a bullish pin bar. All right, now we have a couple of hours before the market closes, But if we close like this, that is a long signal. All right, now this is not the greatest location to take a long, but this is great if you're in stocks, right? We've been buying stocks the whole way, and this is a great time to now let those winners run because we're gonna get another buy signal here, it looks like. But again, I can't make that judgment now. The candle needs to close, and then we need to take out the high of that candle. But if it stays like this, I would not be surprised if we start pushing into these 9,000s. It's very possible. And also, like the Dow is weak today, right? The S&P is weak, but the Nasdaq is strong. Relative strength in the Nasdaq. So what does that tell you? Money's going into tech, right? We saw this back in 2000, this type of weird price action, because they're usually supposed to follow each other. So again, this is a bullish sign. If anything, we get a consolidation here, and that's another continuation pattern to go along. Yes, this is a resistance zone. This is not a place to be aggressively buying stock. We want to wait for the pullback for that. At some point, the market will pull back, and we'll get a chance to start accumulating the stocks that we like again, okay? But I'm not looking for new lows, especially with all the stimulus and all the other stuff that's been going on. You know, people that are, they watch too much news, and they form a bias. The price action is reality. Follow the price action. All right, so that is the Nasdaq. Now, on that note, I want to take a look at the DAX really quick, because as you know, people that follow these, you know that the DAX follows pretty much the S&P and the Nasdaq. Now look at this. The DAX is obviously following the Nasdaq, because, I mean, look at that candle. That's also a bullish pin bar. I mean, it's bullish because we got the tail on the bottom side here, and we're messing around with this resistance, which is this 10,750 area, right? 10,775 area. That Nasdaq pushes through. This is likely to push through as well. Plus, you have a series of higher lows. Look, you have a higher low over here, all right, at this 97 whatever, or I'm sorry, 93.70 whatever, right? The prices don't have to be exact. Then you have another higher low here at 10,250, that area there. So higher lows typically lead to, you should be able to answer that now, higher highs, right? So I would anticipate that this thing would go higher following the Nasdaq. Again, great if you're in European denominated assets, great place to continue to take partial profits. Again, now something like this, you get a breakout like this would be a good CFD trade. That would be good for an aggressive maybe day trade in certain stocks. But for buying for a swing trade, it's a tough area for a swing trade because you don't know how much higher it's going to go. We're nearer a high right now, not a low. So that's the thing you have to keep in mind there as far as using it as a timing, as a guide for timing. All right, now let's go take a look at oil. Oil's another one. Now, oil's been on our radar. I sent out a swing trade on Thursday, which never triggered. Now, there's a strange thing going on with oil right now. We look at the oil CFD, okay? That's the swing trade right there. Never triggered because the trigger was at 21.05, and this was the candle over here, right? And the high of this candle was 20.92. Never triggered. So like I was saying in the chat room earlier, this is how we avoid stop outs. This would have been a stop out, all right? And we'd have had to have taken a loss. But we had two things in place for this trade. For one, 1% risk because we knew it was counter trend. Two, we had that filter in place in case it faked out, which is what occurred here. How this saves you is what people typically do is they just buy because it looks good. It looks, oh, it's double bottom. Oh, I looked at this blog and it said oil's a long, so I'm just going to buy it. Or, how much lower can oil go? It's got to be a long here. Those are all opinions. The market doesn't care about an opinion. The market did not follow our rules. We never took the trade. It's that simple. So now we're fooling around this low. Can this still be a double bottom? Yes, it can. Although, we have the lower high, it's trying to make that lower low. Some people will argue and say, but it is a lower low. Well, not really, because it's not dramatically lower than this previous low. All right, it needs to really take out that low. So this can fake out, all right, but there's nothing there yet. So again, we do nothing but wait for a buy signal. If I see a buy signal at this level, off of this level, I will send out another swing trade long idea, okay, with the same rules. So we'll see how that goes. I still like oils along, especially if we get the failed low, which is what that could be, all right? Again, cannot be opinionated with these things. You just have to follow the order flow and let the market tell you what it wants to do, all right? Any questions, again, please feel free to ask. I'll be happy to answer them. Um, all right, now let's get into. I want to take a look at gold because there's been a lot of action in these commodity pairs, right? So here's gold. Gold has been pushing these crazy highs. And same with like oil. Oil, there's been this strange thing with the actual futures contract and the CFD. The prices are not even close. They should be close and they're not. Gold has a similar situation. So gold has been trying to push this 1750 area, and this may turn into another continuation pattern long, especially since it's an old resistance, new support, which is here at the 1685 area. This is a tough place to buy gold, but you know what? If we get the signal, we'll be open to an aggressive swing trade, with a 1% risk type of thing. But again, it has to meet the criteria. So it's not there yet, but it's definitely on our radar. I mean, there's no question gold is strong. And, if you look at the context of the environment, we're in an inflationary environment, so that should be supportive of gold. Now, you notice I'm not jumping into gold because I have an opinion that the environment is inflationary and gold has to go up. Gold is going to do what it wants to do. Okay, it doesn't have to do anything, especially whatever I think it should do. So we'll see what happens with that, but we cannot argue it is strong. There are higher lows, and it should push to another high. The next high in this thing could take it into the high 17s, maybe even into 18. All right, that's what it looks like here. So keeping an eye on gold for a swing trade long. Now, as far as stocks go, actually, one more Forex pair real quick I wanted to just cover was the euro. And then I want to look at some stocks. I have a couple of interesting stocks here. So the first one is this euro here. Look at this situation. So euro is consolidating, right? As you can see, we have lower highs and we have higher lows coming together into this consolidation. This can turn into a long signal. Why? Because it's nearer a low, it's nearer a support. Now, again, there's a lot of political stuff going on with this. There's a lot of, similar with what's going on with the European Central Bank as far as monetary policy and blah, 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 and all that easing stuff, right? A lot of stimulus, which actually should be bearish for the euro. But the question is, which one is going to devalue more, the dollar or the euro? That's what's going to affect this pair. So instead of getting caught up in all that confusion and trying to figure out, which one is going to have whatever, we just follow the chart, okay? And that's what a discounting mechanism is. That's what it means. It means price factors all the known information in the world at the moment into the price right now, and we can make a decision based on that because we are operating on the most accurate information available to us retail traders who don't have inside information. So I am liking this as a possible long, but not yet. Again, we have to see what kind of setup we get with this, but I'm open to it. So keep it on your radars. Now, let's get into stocks real quick. The first stock I want to go over is this stock that I found. We're going to talk about this on the radio show today. Okay, and let me see, is this the right stock? I'm sorry, no, that's not it. It's MR, okay? Mineral Resources. Now check this out. This is obviously, it's a cheap stock, and that's why we're going to talk about on our podcast, which is at 4:05 p.m. Eastern time. So if you'd like to check that out, I'll have the link in the chat room as well, or you could watch it on the YouTube channel. But look at this nice higher low at $3.50. And look at this move today. Wow, nice move, right? That's a big move for such a cheap stock. So this is definitely one for the radar. Now check this out. Look where this stock used to be. This stock was at like a lot higher. Look at this. Look at this. As I go back, look at this. This thing was like at $30 or $38, okay? Back in like 2018 or going back, before that. Look at that. So obviously the stock had problems since then, but it may be turning around. I don't know the fundamentals on it. All I'm interested in is this chart, okay? We have this nice failed low situation here at this $2 price, and now we have a higher low. Nice bullish structure. So again, MR, Montage Resources. Keep this on your radar because we may do something with this, okay? Again, we're going to talk more about this on the podcast today. All right, now one more, and that is one of my, people love and people hate, CGC, Canopy Growth. Because today is 420, right? That's a pothead number, or that's a don't ask me how I know that, but it's an important number if you're into cannabis. And if you notice today, 420, right? If you notice today, CGC is attempting to take out its resistance at 15.5. This is important. This is very important because it's been struggling with this level. It's a minor resistance, but if we can close above this, this would be a significant breakout for this sector since this is the leader. Okay, so we have a higher low off this like this 14 level, and we should push this higher high in theory. That's what I'd like to see. Now, you know, the next push into this can take it to the resistance of like 18.25, something like that, and that would be really nice to see, especially since we have, you know, I know quite a few people took that ACB trade that I shared in the chat room, and it's been a pain. Okay, this whole sector's been a pain, but maybe today, if this thing can prove itself, this could be the sign of a turn. So this is great. We didn't even touch that support around that $12 area again, which is great. We're flirting with the resistance instead. People are not paying attention to this sector. So this could be the breakout that we need. The real resistance on this thing, by the way, is 28. That's the key resistance. So it's got a lot of room to play with. And that's one of the reasons why I like this sector, because there's a lot of potential there, especially since no one's paying attention to it. Okay, so I'm going to wrap this up. If you have any questions, please share them in the chat room now, and I'll get to them there. Thank you for watching, and make sure to check out our podcast at 4:05 p.m. Eastern Time. You could check it back here into the YouTube channel, and you'll see us doing it there, and you can ask your questions there as well. All right, thank you again for watching. Have a great day, and I'll speak to you soon.